there's someone who's watching or listening for sure live or going to be watching and listening to this recording and thinks that the real estate market is going to fall and I should sell everything that I own. I want us all to kind of speak to that. Simos, why don't you kind of talk about that a little bit, and then the boys can comment on that as well. Like, what's your thoughts on that? Like, oh my God, I should sell everything I own right now. It's falling, the sky's falling, and values are going to drop.
I think it's time for everybody to really, really realize what this is and what it's not. I know the boy said this is everyone's problem, and that couldn't ring more true. Every single person who's staying home, the reason we're doing this brunch virtually is because we're self-respecting human beings. We want to stay involved with everyone, but we know that we need to do it from a distance right now to stop this. The more people listen, the quicker this is going to be over. The only thing we're trying to do is stop the outbreak. We're not stopping a virus. We're not medical experts. All you're doing is sticking apart in order not to pass it on and overwhelm a city's or a country's healthcare system. The country just invested trillions of dollars to make sure that you stay home with as little impact as possible. We're printing money that's going to have an effect on our long-term economy, clearly. But at the end of the day, the more people listen, stay home, and take this seriously, the quicker we're going to get back to business. No matter what anyone says, we're going to get back to business. Whether it's 2 weeks, 4 weeks, 8 weeks, 12 weeks, 20 weeks. Obviously, we want it to be in the next 2 weeks. It's not going to happen. Call it 4 weeks, 6 weeks. Whatever it ends up being, it's still not enough to take down an entire civilization's way of living. Is there going to be consequences to it? Sure there is. Are different markets going to take the carnage differently? Yes. Alberta, who is reliant on commodities, already saw the biggest hit they've ever seen, and they're going to suffer for a longer period of time to get back up after COVID is done. In Toronto, where we enjoy a services market, and a tech market, we're going to have a much more rapid response to rebound. Why? Because people need to service all those industries, no matter what. Real estate follows real life. If you're in a market where people need to be or want to be or whatever the case may be, up to 4 weeks ago, March 15th, we were on track for a record-breaking real estate year. Nobody created COVID. COVID happened. So it's an anomaly in the marketplace. It's literally somebody put a branch in your spokes of your bicycle. It instantly happened, and we have to deal with it. We don't have a choice, but that did not change the dynamics of the market, meaning that somebody who came here to study is going to stay here and study. Everybody has to wait out the virus. Whoever came here to establish their tech company, they didn't invest $5 or $10 or $15 million to relocate to Toronto because of a better and more educated workforce, and they're just going to pack up and leave because COVID ruined their plans for 2 months. It is what it is. So everybody stop looking at it because we don't know. If I could go get my crystal ball that I pulled out last week, but just relax. So the sentiment just has to relax. Relax.
Now, Peter, Sasha, are you guys what are you advising clients right now? Similar to what Simos is saying is stick to the strategy of buying and holding, because all of us on this, which is someone dubbed it the REC Hollywood Squares. So that's the name of this podcast episode when we do air it. Everyone here, part of REC Hollywood Squares, we own a lot of real estate. Our macro thesis is to buy and hold. What's your guys' thoughts about somebody saying that the sky's falling and I need to sell this?
I mean, I think, people who trade stock for daily gains, I don't know anybody that buys real estate for short-term spikes, right? So the strategy and the asset class is inherently a long-term investment, right? So when things like this happen, whether it's COVID, whether it was the financial crisis in 2009, whatever the exogenous shock to the system, emotions get involved. People get nervous, they get anxious. And as a result of that, it's hard for them to see through sort of the current cloud and set of circumstances. But we have to think about the fact. So Simeon, what you said, I think is very, very true. I think that from a macro perspective, the fundamentals of this market, certainly in real estate more broadly, but certainly in the GTA and Greater Golden Horseshoe, were great and among the best in the world going into this. We had an exogenous shock. We all have to adjust. We all have to deal with it. But it's a period of time. And whether that recovery coming out of this is 2 months, 6 months, a year, whatever that number is, I think that the fundamentals will prevail. And because you're buying something that has a long-term thesis, you got to stick to that thesis. So, people asked us, and I'll let Peter kind of comment on it, but people asked us as it relates to acquisitions, and we're actively looking at acquisitions. And somebody asked me, well, how do you do that? And I said, well, when you're acquiring a piece of land, you're selling something 12, 18, 24 months down the road. So I can't be looking at what's happening momentarily. I have to think about a broader macroeconomic context that I still think is intact, notwithstanding what's happened.
What's interesting is that I've had this version of a discussion many times over the last 15 years. I had it in 08, 09, even had it in 2011 when, sales slowed down. We had it in 2005. Like, it's kind of crazy to think that like people's minds go to the world is ending so readily in a city that's growing so much, right? Like, we're not, some small Midwestern town in, wherever, nowhere America that nobody wants to go to. We don't want to have industry. We don't want to diversify. Like, Toronto's a global city. And if you buy the world is going to keep growing in population and people are going to want to live in good places, I think that's one of the unique things that investing in the Greater Toronto area, and frankly in Canada and certain major cities, bring, right? Our vacancy rates across the country in terms of available rental units is next to nothing. Our immigration is what it is because we don't allow it to be more. The number of people who want to be here is large. People want to open businesses here, the quality of the life that we offer. So those are the key long-term things that drive real estate. You might see short-term shocks, and that short-term shock might be 2 months, might be a year, might be whatever it is. But when you're investing over a lifetime, over multi-years, particularly if you're investing in if you're buying real estate and trying to buy it for $1 on Monday and sell it for $2 on Friday, you're just in the wrong business. And if that is even possible, you probably don't want to be in that business because it's more vapor than anything else. And when it's funny because we have 15 of the biggest developers in the country as our partners. Some of them are billion-dollar families. All of them are several $100 million families. And they all called me and said, okay, there's always opportunity. Let's go buy stuff and let's go buy stuff at, a cheap price.
100%.
I'm like, it doesn't work when every single person in the industry is flush with cash and really wants to buy stuff and no one's hurting except for, I Sasha and she's on one of the questions and saw somebody talking about developers going bankrupt. That had nothing to do with COVID. And that happens all the time for various reasons. And we can talk about specifically what that means.
And yes, we can. Yes, we can, because it's all over the news. We're not bringing anything out of the bag. We're referring to Crestford. Please do mention it. Finish your point, but do go back to Crestford.
And the moral of the story, is that the people who were in trouble before this, there's always some section of the development community that people don't know the difference between private communities and no-name developer here in some cases, which boggles my mind. Like, if you're buying a car, if you're buying a Mercedes or you're buying, Peter's Vroom Special, right? And I'm not saying that specifically Crestford was that, but these are unique circumstances around projects and not around the greater industry. And, their assets are coming up for sale. And I had 10 of our developers call me and say, oh, we should look at them and see if we can buy them at a discount. Like, well, I've got 10 other people who just said that. So I don't know how big of a discount they're going to be available at, particularly the locations they're in. So let's look at them as rational human beings rather than thinking that nobody else wants to buy these great assets.
It's funny.
And specifically to Crestford, it was a number of things that happened, but I think it was one common mistake that they made across their entire portfolio, which was they sold their inventory way too early before they were prepared to start construction. And the construction costs ran away from them. And they did something that I probably wouldn't have supported, which is they just kept going in an effort to try to fix it later without really a bridge to fixing it. And that's what got them here. I can tell you that I think I have a lot of respect for a lot of people that worked at Crestford, because I know some of them, and they're not bad people. I don't think they did this with malicious intent. It's what happened. But Sasha and I talked about one of their projects in particular, about when they sold, we knew delays that weren't even necessarily their fault, but just the functional reality of how the processing applications have gone in the city of Toronto. And it was going to be impossible for them to build it based on where construction costs have gone. They're not sitting there saying, how do I make more money? Literally, these projects are not financeable based on what they sold them for and when they started. It's important to know that that is one of the biggest things that Sasha and I spend time on managing our projects. It's when we sell something, I know how close I am to pulling a building permit so that doesn't happen. That was something that 5 years ago and 10 years ago was not as much of a concern. And if you're not always in the market seeing this, we see good developers with good reputations run into this problem.
So, Sasha, you wanted to add something?
I was just going to add that, we're talking about Crestford specifically, but as Peter, I think, pointed out, that over the course of our careers, we've seen some version of this happen quite frequently. Maybe it's not as newsworthy, maybe, it's people don't know about it, but if you're in the industry, you certainly know about it. And, when I speak to investors at times, people will say things like, well, Toronto's had a great market, so of course everybody's made money. That could not be more incorrect, right? Especially as it relates to development, because when you're buying a piece of land, which is essentially your inventory, to the point where 300 people have moved into their finished suites, there's thousands of decisions and thousands of variables. You can make the right ones or the wrong ones, right? So execution is everything. And even in the 15-year bull market that the GTA has seen, there has been plenty of carnage. So as it relates to real estate macroeconomic thesis, no question we're in one of the best places in the world, if not the best, from what the drivers are. But that doesn't mean that you're not going to, potentially have risk if the people at the helm aren't making the right decision.